Hey guys, it is Jimmy with Swiss Realty here. We are doing another video, and in today's video, we're going to go over a question that I get very, very often. And in this question, it is cash flow versus appreciation. Which one is better? And I feel like when I talk to investors, everyone obviously wants cash flow. And not a lot of people, I would say, not as many people care too much about appreciation and built in equity when it comes to their investments. They're all about the cash flow. So, kind of in today's video, I just want to take some time to kind of go over cash flow versus appreciation and kind of just show you the different angles of this argument essentially. So, let's get started. So, first thing I want to let you know, again, my name is Jimmy with Swiss Realty here. I work in Columbus, Ohio. I help investors buy the next buy and hold, BRRRR, flip, short-term, mid-term rental here in the Columbus, Ohio area. And the one thing about our market when it comes to Columbus, Ohio, is that it is by far one of the most best appreciating markets in the entire US right now. It's one of the hottest real estate markets. It's one of the fastest growing cities in the entire US. And this article highlights that exactly. You can kind of see here it says home values in Franklin County have jumped 20% in 3 years. That's essentially 7% over the last 3 years. This article was written in 2020. It's obviously 2025 right now, so it's a little dated. But I recently even saw a more recent article. This was like literally a month ago. It said that Franklin County properties have appreciated anywhere from 7 to 12%. So again, I can only speak for Columbus, Ohio, but here in our market in Columbus, Ohio, the appreciation on the real estate here is basically beating the SP 500. That basically means that your appreciation alone in real estate, just from your real estate alone, it's beating the stock market. That doesn't account for cash flow, doesn't account for principal paydown, doesn't account for all the tax benefits and depreciation that you'll be getting as well too. So again, if you add in all those returns, you're way over the SP 500. But again, in appreciation alone, you're literally destroying the stock market. So again, that's why 100% buy real estate, especially in a hot market, whether it's Columbus or another hot market, real estate is the way to go. So essentially, that's what I'm trying to say is, again, appreciation 20% in 3 years. That's an amazing return. Okay, with that being said, and then we're going to go to the next point. So here's the reality, and here's my opinion. And when I say this, this is just my opinion as a real estate investor. Again, you guys can completely disagree, agree with it. So here's what I would have to say. The reality is you will become financially free when it comes to appreciation and equity. This is how you build financial freedom. It's not from the $100, $200 a month cash flow that you would make. Yes, it helps. It supplements the income. Don't get me wrong. I care about cash flow as well too. But at the end of the day, it's the appreciation, it's the equity in your real estate that will make you become financially free. So, an example of this, okay? Let's go over an example right now. So, in this example, we're going to look at a single family house, let's say in Columbus, Ohio. Let's say it's a 200K house, like a very average price house here in Columbus, Ohio. Let's say it appreciates anywhere from 7 to 12%. That's kind of what that article mentioned as well too. Over the last 12 months, Columbus, Ohio real estate has appreciated anywhere from 7 to 12%. So the house appreciating 7 to 12% and appreciation and equity, how it will help you become financially free is because when the house appreciates and the real estate appreciates by a lot, you can then cash out refinance after you have gained substantial equity in the property. So obviously what that means is you basically pull out a bunch of money essentially, and essentially the goal is to own the property free and clear. And then with the money that you pull out from the cash out refinance, you would have then more capital to purchase and scale your properties and snowball your investments essentially. So you would own property, the first property that you bought, you would own it free and clear, and then you would have a bunch more capital to scale out your other investments and buy more property. So again, it's a snowball effect. And with that being said, second point I'll make is that when it comes to appreciation, so let's say again 7 to 12% appreciation for a $200,000 house. So that basically means that if you're looking at 7 to 12% appreciation for a $200,000 house, your net worth will grow $14,000 to $24,000 a year versus $100 to $200 a month cash flow, which in this case it would be pretty much $1,200 a month to $2,400 a year. Sorry, $1,200 to 2.4K a year when it comes to growing your net worth. So 14 to 24K, which is a crazy amount, versus 1.2K to 2.4K, which that's very, very minimal essentially. And on top of that, next point, third point I'll make is that buying a property with lots of built-in equity is income in itself. So let's say you buy a house. Let's say you bought a house, and again, this is a client that I recently helped as well too. I helped them close on a 3-bedroom, 2-bath, single-family house. Purchase price was 185K. He basically put in 25K, and essentially the ARV after he finished renovating it was 264K. So pretty much it's gained a ton in equity ever since he purchased the property. And yes, he's not cash flowing the best. If anything, he's probably a little bit negative cash flowing. But the thing is, he basically from 185 to $25,000 in renovations, all in, he's at 210, around 210. But he has $50,000, roughly $50,000 worth of equity. So again, how I look at this is the built-in equity that you have from a property, that is income in itself. And a lot of people think that that's not income, and I can say that is as far from the truth as possible. So again, built-in equity is income in itself. And then the next thing I'll say as well too is that a negative cash flowing property will cash flow eventually through rental increases, through principal pay down, through interest rates lowering. Eventually they will become cash flowing. So again, even if let's say you have a house that's negative cash flowing $100, $200 a month right now, you have to remember, you as a landlord, you should be increasing rents every year. Typically, obviously to match inflation, typically you should increase rents around, my rule of thumb is 5% year to year. So obviously you're going to increase rents every year. You're going to pay down the principal of the mortgage every year. And on top of that, interest rates right now, they're at roughly 7%, high sixes right now, but they're eventually going to go down as well too. And when they do, just do a term rate refinance. And again, it will be a cash cow. So eventually it will cash flow. Eventually, 100%, no doubt about it. So, and also there's a really good saying with this. It's that there's no such thing as a bad real estate deal. It's just that you haven't held it long enough. And again, I live by that quote. I completely agree with that quote as well too. So pretty much, yeah. So negative cash flow. And again, one last point I'll make about this as well too is that your returns only get better the longer you hold the property. And again, that's kind of what I said. Rental increases, principal pay down, interest rates lowering. Again, your returns will only get better after you purchase a property. So then very last, so with that being said, so just want to make this clear with everyone. My argument isn't that cash flow is not important. And of course, it depends on your goals and your resources. If you're that investor where, you are very limited in funds, and you don't have a great paying job, let's say, and you are reliant on the rental income, yes, I agree with you. Cash flow is super, super important, and 100%, that is probably your first and foremost focus. But let's say you're that investor where you have a great W-2 job, you make over 6 figures, you're doing very well for yourself. You don't necessarily need that rental income. I would say definitely, maybe positive cash flow isn't that important to you, and maybe you can look at appreciation in this, with that being said. So my goal of this video is just to highlight a different perspective and show you that when it comes to investing, it's not black or white. It doesn't mean like, hey, if it doesn't cash flow, it's not a good deal. That's not what I'm trying to say. I'm just trying to say like, hey, equity and appreciation, investing for that's 1,000% a way to build financial freedom. That's what I'm trying to get at from this video. And then very last thing I'll say when it comes to this video is I will leave it with this example right here. So let's say we have 2 properties here. Let's say you have property number 1, which is in a really desirable location, really desirable school district. Again, I hate putting grades on neighborhoods, but let's say, just for the sake of it, for example, let's say it's like a B+, A- neighborhood. Really, really good, desirable area. Everyone wants to live there. And on top of that, you're going to have amazing tenants that will pay on time every time. Amazing tenants. They never bother you for anything. And they're just great tenants and people overall. No criminal drug background history. Amazing credit score. Great tenants overall. But from this property, you are going to be negative cash flowing $100, $200, negative cash flow in year 1 and year 2. But you have to remember, it will eventually cash flow very, very soon. But with this deal, even though it's a little bit negative cash flow, we're going to have tons of built-in equity, anywhere from $30,000 to $50,000 worth of built-in equity. And for future appreciation purposes, it's going to appreciate like crazy, honestly, because again, this is one of the most desirable neighborhoods in Columbus, Ohio. So again, this is the first example. I've closed so many deals that look exactly like this. And if it's something you're interested in, hit me up. I could definitely find you a deal like this. But that's what I'm trying to say is we could find realistically deals exactly like this. And then example number two, and this is more the typical cash flowing deal that I come across that I help a lot of clients close as well too. And again, if this is what you're looking for, I could help with that as well too. So example property number two, it's in a decent location, not the best. It's again, middle of the pack, not the best, not the worst, blue collar, family oriented, long-term tenants, working class. It's in a decent school district, okay school district. It has good tenant quality. Not amazing, obviously. Again, you're not working with, top earners or anything like that, but you still have good, decent tenants essentially. And you are going to be cash flowing immediately. $100, $200 cash flow, a few $100s even. You will be immediately cash flowing. And it has, good built-in equity, good appreciation still. But these are two examples of properties that I've helped a lot of clients buy. So again, if you are in property number one and you're into that, kind of that buy box right there, I would love to help with that. And again, just to let you know, the goal of this video is just to show you that real estate isn't black and white. It's not just you have to have cash flow. Investing for appreciation and equity, that's 100% something that is doable, and it's something that will help you stair step into financial freedom as well too. But with that being said, that's pretty much the video. I just wanted to just highlight a few things when it comes to this argument that I've heard many, many times. But yeah, with that being said, I will close it out right now. Thank you so much, guys, for watching this video. My name is Jimmy with Swiss Realty here in Columbus, Ohio. I help investors buy their next buy and hold, BRRRR, flip, short-term, midterm rental here in the Columbus, Ohio market. So again, if that's what you're looking for, definitely hit me up. I would love to help. And also, if you have any questions, definitely feel free to reach out. I would love to work with you guys or answer any questions you have. So aside from that, thank you so much. Really appreciate it, and talk soon. See you guys. Bye.